The market is essentially flat today, but that's not the case for Facebook, which is down once again. I'm here with David Henderson from Drew Stock. So there's been a lot of finger pointing following this IPO because people are saying, Morgan Stanley didn't price this right. But, there's a real art to pricing these stocks.
Most definitely. I mean, I think when you say finger pointing going on, whenever anything goes wrong, it seems like everyone's looking to blame somebody else. And, who knows where it's going to end up, where that dime's going to fall. But, it puts a big black mark out there on the NASDAQ, even on the Facebook people. It looks like, maybe there's a lot of greed there involved, which perhaps is correct to some degree. And, eventually, it's like a water. It'll find its own level, and we're hoping sooner rather than later. And we're in a quiet period during this week here, Memorial Day weekend coming up. And I think that a lot of buyers have sort of got a bad taste in their mouth, and they're not quite sure where they're ready to jump in or not. The market's been on a terrible roll for the last 2, 3, 4 weeks or so. We had a little bit of a dead cat bounce yesterday, thank God. And, I think the market is still trying to find its legs. Where it all plays out, who knows?
Well, when you mentioned that, that with the Facebook falling and the market righting itself, originally they were going to price it between $28 and $33. It's now at $31. So it's really drifting into that original range. And by all indications, seemed like there was so much demand that it seemed like a higher price was warranted.
Well, I think there was a lot of pressure that was put on Morgan Stanley and the other underwriters, to get the highest price possible. And they did their damnedest, and they got it all done. But again, maybe they should have been, a little bit more foresight in there and went it with a lower price. But the pressure was too intense. They did what they were intended to do. When the original opening last Friday, when it did open up, it went up to $45 at one point, and then it continued to sell off. I think part and parcel of all that was a lot of the traders that were involved on the first day of trading really didn't know where they were, where they stood, what they bought, what they sold, and things were up in the air, and things were still being straightened out yesterday. So there was a lot of uncertainty that was out there. When you have that kind of a thing happening in a market or in a stock, you get craziness. So now we're going through this craziness. It's playing out. Stock's still under a lot of pressure. And probably it's not going to really maybe stabilize until we probably get an earnings season, when their earnings come out in about a month or so.
You've been down here at the floor for some time. Is your feeling that maybe if this had come to the stock exchange that it could have handled this kind of flow and volume better than NASDAQ?
I definitely think that if it was here, it would have been a different story. It would have played out a lot differently. It always helps to have a little bit of a human factor involved in there. When you're dealing with machines, the machines, they don't know any better. They're looking for any price on the bid side or any offer on the offer side, and they're taking in or hitting. It doesn't matter. But down here, it definitely helps to have that human factor involved. And Facebook made a choice. They decided, maybe for whatever reason it was, to go the way they went. And I think, if they had their dithers and they could do it over, they probably would have thought twice and maybe come here.
All right, well, that's David Henderson from Drew Stocks thinking, you know what? Maybe Facebook is going to rethink where they're at.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're getting